of our clients are asking these days, is high inflation the new norm? In my view, either inflation will dissipate of its own accord, i.e. the global economy adjusting, or the world's central bankers will raise interest rate until inflation is defeated. I prefer the former scenario because the latter likely comes with an economic recession, which is not what politicians, populations, and to a lesser extent central bankers actually want. 2022 has been the worst year for financial markets for decades. The sell-off in global bonds caused by the rise in global interest rates is actually the worst since 1788. That was the year after the US Constitution was created and the year before the French Revolution. Data, of course, from way back then is a tad iffy, so I won't guarantee the accuracy of that statement. However, I can tell you that it is certainly the worst year for bonds so far in the modern era. Shares too have had a very poor start, as has nearly every asset class. Even cash is down in real terms, as deposit rates are so far below inflation. Usually bonds are an offset from equities, but one works when the other doesn't. But not this year. 2022 has seen the biggest simultaneous drop in both major asset classes since 1976. In my opinion, this global economy will eventually adjust to the shocks of both the pandemic and the war and will return to a more normal state. However, I believe that the cost of doing business will stay higher than it was pre-pandemic, but it should recede from current levels. If so, inflation will fall to more moderate levels as well, and economic growth, although slow, will not be stagnant. Interest rates too won't go much higher and would actually drop a little. A state of chaos could continue for longer though, if there are more political disruptions or worldwide resurgence in the pandemic. Or, and more worryingly, if governments around the world don't lock away that checkbook. The pandemic and the cure-all of cash gave politicians around the world a taste for spending, something that most governments had been cautious with for decades now. Most support programs are finished, and currently reducing the amount of free money is starting to impact the inflationary picture. But this may be one of the long-lasting effects of the pandemic. Politicians had the perfect excuse to spend, and spend they did, and they liked it. They will probably find the temptation to do so again, whether from redistribution aims of perceived social imbalances or from rising defense spending to counter perceived threats, or whatever excuse they can find. In effect, this means that we could be entering a period of low inflation driven by technology and demographics, combined with an unpredictable inflationary spikes as fiscal policies lurches from project to project. Looking forward then, what does it mean for the immediate future? I think the immediate peak has been passed in inflation and interest rates and commodity prices, except for maybe the short end with the official cash rate, but certainly at the longer end we should be fine. And that further aggressive monetary policy tightening could actually cause a recession if they're not careful. But central bankers will do virtually all they can to avoid recessions, and as such I expect they will ease off once evidence of inflationary coming off the peak is apparent. So expect a slow economic period, but not a full-blown deep recession. In that environment, traditional investing would be centered on value companies with reliable earnings growth and also a high-quality residential property portfolio. So what does this mean for the investors? The roller coaster ride will continue, I'm afraid, for the foreseeable future. But the key, of course, is going back to revisit your long-term investment objectives. If you are uncertain, then please contact us to help guide you through this rigmarole of investment. Thank you for your time and for watching.